Shut up and sit down.
All right, everybody, welcome back to Rebel Trading Group Podcast, episode 39. Today's date is September 6, 2018. It is a Thursday, people. What is up, everybody? My name is Nathan Oliphant. And with me, as always, is the gluten-free Jason Bessing.
The gluten-free Jason Bessing, not to be mistaken with any other Jason Bessing. What's going on, brother?
Hey, man.
How'd you do today?
Well, I ended up after Mr. Toad's wild ride in the options market.
Mr. Toad's wild ride.
It's really weird talking about one single option, but when you have multiple option strategies working for different stocks, your portfolio likes to take a bouncy trend.
Mm-hmm. Yeah, options, dude, I don't know what it is, but almost every single day at around 9:50 to 10:15, between that time frame, somehow I spike up 2% every single day, and then it just comes back down. And I always get this huge pop before the rest of my day actually pans out. It's weird, and that's because there's a lack of liquidity in the options market. You know, not to be mistaken, you can unload your contracts, but the price spreads are very different, and the price movements are different. So rather than, 10.01 a share and 10.02 a share, you're changing like, well, the bid is at 37 and the ask is at 46. So, you got to meet somewhere in the middle.
On both contracts. On
both contracts. So if you want to unload, you can't just go and get the market price necessarily.
Yeah, it's like it'll be different from
it's going to be contracts. Different. Yeah, and it's tough to get in and out of some contracts, and that's one of the things you got to know before you jump in that game.
I feel like I calculate because I kind of just want to get out. If I'm at a high enough gain, I'll just kind of like pay a $5 difference and then sell it at the bid. Yeah, I'll sell it at the bid. But I'm still making money.
That's your best way to do it, to be honest, is wait for that bid to come into your zone and then execute there, because that's going to be your easiest chance of getting out. Or simply just put a limit order in. If you can identify the price you want, you can just put the limit order in and go to sleep.
Right.
Real quick, while we're on that topic, let's just go ahead and hit the market terminology, because it kind of goes right into what we were just talking about. Okay. Real quick. I'm going to steal it real quick. The mark. You familiar with the mark? It's usually more so used in options when you look at those kind of instametrics that are option specific.
I don't know that then.
I
feel like I've heard it then.
I know you've definitely seen it. I'm pretty sure Robinhood displays it, but the mark is that numerical value that is between the bid and the ask. So if there is a wide spread, which some of these options have very wide spreads, hundreds of dollars, like let's to use a simple number, you have one bid at 10 cents and then you have the ask at 50 cents. Okay, well that mark is going to be 35. Because that is the direct middle. I'm sorry. If you had the bid between 0 and 50, the mark is going to be at 25. I don't know why I was thinking 10.
Okay.
The mark is 25, and that is just a number to put instantly the middle of the bid and the ask.
It's almost like your market price.
It's almost like the market price, but don't let it fool you. If you put in that market options order, that is not the market value. It's just a metric on an options to see where the midpoint between those is.
Robinhood will ask on really high spreads, are you sure you want to make this a limit price? Like it'll warn you these spreads are ridiculously
Yeah. Or I've got one saying no one else is buying this option today. I was that's fine.
You're the only one in the market.
I want it. Yeah. You're by yourself on this one, brother. Hey, you know what? The funny thing is that worked out for me earlier, and as CHK took a dump.
The options still have fundamentals that they move by.
They do, and they move separately from the stock.
Yeah. Just because there's no market doesn't mean it's not going to move.
Oh, yeah, because it's always attached to the underlier.
So that case, like in your case, like you would definitely, if you're the only person in that market, you'd be definitely be ready to factor in that sell-off. I would call it like a sell-off premium almost.
Mm-hmm.
Is you're paying a little bit more to sell out.
Yeah. And
sometimes you gotta.
But let us not be mistaken. This isn't all options. Most at the money options will be highly liquid with a couple pennies on the bid ask. The bid might be 45 and the ask is 47.
Someone comes in and 48's it, or 45's it.
And they move the options premiums along with the side of the stock. And it's a beautiful thing, but you've got to kind of know what you're doing. But the mark is simply the middle point between the bid and the ask. Bid is 50, ask is 100, 75 is the mark.
All right, hit us with the numbers, man.
There you go. So that was the terminology. Boom. Let's go ahead and go to the numbers. We haven't even done that yet. Dow up 20 points.
That's my boy.
S&P down 10.5. NASDAQ down another 72 points. NASDAQ taking another beating. Nathan, why is that?
The NASDAQ taking... Oh, man. Technology is kind of under review with the government right now. I don't like that. The market doesn't like that.
Bitcoin trading at 6,428.
Cheap, baby.
Still taking it
Going
with
down,
the Bitcoin.
Down,
so it's all right. We're hanging in there. I think this was potential for opportunity. Yesterday I talked about Litecoin, and I think this additional drop is more opportunity.
I bought a Litecoin at $54.99.
Ooh.
Damn,
today?
Last night.
Last night, yeah. There was a good opportunity there. So,
excuse me.
Those are your numbers today. Oh, while I got it here, gold. We're going to start doing that.
Yeah, baby.
Kind of remind me, man. Gold trading at $1,200. Still sitting in that 1,200 range, holding it strong.
I'm going to buy some soon. I'm going to buy GLD. I'm going to buy GLD, not the gold miners. I don't know.
You don't want to go left?
I don't know, man. I just want to know that I'm doing the actual thought of owning, my money going towards owning actual gold.
Yeah, but there's fees associated with that, and see, the way I think about it is, I am way more comfortable triple levering commodities than I am triple levering.
How many fees is attached to GLD? How much? Fees?
Not much, to be honest, but it doesn't have as much movement. So if gold is going to move from 12 to 13, yeah, that's great. If you got $1,200 in it, you made $100. But if you triple leverage it, you're talking 20-30% gains. And I'm comfortable attaching that leverage to commodities because commodities always tend to retain their value of what they are, whether it's gold, oil, or corn.
So are you investing in Nug?
I would be happier going with Nugget or J-Nug. Or J-Nug.
The junior, I feel like that's the Russell 2000 of the index of the gold indexes.
Hey, I'm about it. Give it to me. Give me that volatility.
Is that what that means? The junior miners is like the
small cap mining company.
Yeah, I don't like that.
Did they move? If the gold business is a booming,
well, the gold business isn't a booming, man. I feel like
not at the moment. That's why I think it's setting up for buying opportunity.
You think price movement's just going to come from the demand being so low and the price just dropping and someone's going to scoop it up so low?
Eventually, it's just how low can gold go? The dollar would have to be so high.
They're going to have
to go that low.
Pretty soon, if it keeps dropping, they're going to have to split NUGT, Nugget.
Yeah, well, they're a trading vehicle, so they'll always split it. I think most of the triple leverages have split 3-4 times.
They have to,
because they're meant to be cheaper priced. people can deal in more shares. But I don't know. I feel like if you're going to play gold for if you're trying to play it as a profit, like a big profit potential opportunity play, leverage it. But if you're looking for more of a hedge or just something to park a little bit of cash to ride out the potential of a bear market approaching as we keep continuing to hit new highs.
You think
we're almost at Dow 26,000.
Do you think there's going to be a bear market or a correction? What's the difference?
Well, I feel like a bear market, we haven't seen that as traders ourselves. A bear market is massive sell-off that sustains, over the course of a year. And most Wall Streeters will say that the general rule of thumb is 20% over the course of a year or somewhere on track with that. And that's a bear market. So like that correction we had in January, that disgusting, I was getting alerts, 1,700, 1,800 points sell-off. You remember that? Dow down 1,800 points.
Oh, I own triple leverage funds at that point, of course.
Oh, yeah. I was in UDOW. I got fucking
I was
nailed.
in UDOW and yen. YINN, the triple level Chinese fund.
Ugh. We were going with the bull times, though. We just got our asses handed to us in the end of that. But my point being, it all came back.
Yeah.
It took a few months, but it came back, and now we're at all-time highs. It's almost as if it had never happened.
6 months.
It erased it, and like I said, like we both said on this podcast back then, there was a lot of opportunity out there to pick up your favorite stocks, and sure as fuck was true, wasn't it?
Yeah.
And I still think that there is some value out there from that correction, and I think we might see something like that again. I don't know about 1,800 points in a day, but I could start seeing sell-off here, sell-off there.
I can't keep buying puts, Jason. You don't get it. Like, I just can't keep buying puts into this fucking bull run. And then look back and say, God, I wish I would have bought a call.
I know. It's hard to time that market. That's why we don't do it. It's very hard to do, and nobody can do it with 100% certainty each and every time. It's impossible to time everything perfectly. But you can set yourself up to be ready, and gold might be a good way to do that.
Maybe.
But a bear market, is a longer-term correction, couple months, massive sell-off,
so
maybe even up to a year.
So what we're in right now is just not really kind of any market. It's just a correcting correction.
Yeah.
That's what it did. It corrected itself.
We're rallying back.
Yeah, it's correcting itself.
And one more thing I might add to it, if I may. We're like about maybe 40 days away from the next earnings season. So like if things go down and we get hit hard, it really relies on the companies who are still putting up strong numbers. Our economic numbers are still looking good. Unemployment coming in a little bit under expectations or at expectations, and
let's give it a call right now. Are we ending is the S&P 500 ending positive this year?
I'm gonna call it 3%. No, wow. I'm gonna call it 316 on the S&P. So
salt and pepper.
S&P 3,160.
I like that. I'm saying S&P 500 4,000 end of year.
Dow 27.
That's 1,000 points.
Do you have an end of the year stock that you hope is? Like, do you have a core holding that you hope is going to be better and more improved end of year? Mine would be Disney.
Ford.
Ford.
Yeah.
I think that if everything buffs out with Canada, they can have some potential. Interesting.
I'm buying core holdings of Ford to sell covered calls as well.
I like it. It's a great stock to do it with. Those big dividend payers.
What are you doing monthly on those?
I like quarterlies.
You like 3 months?
So I start with a quarterly outlook, and then I will look at 2 month and 1 month, and I'll compare the premiums. Because sometimes, like, the 2 month might have the best value at that same strike. Sometimes it just happens to work out that way. And then the 3 month might be a little cheaper. So, like, there might be a 27-cent here, but then the 35-cent on the 2 month.
They have a $9.87 strike price. Does that seem right?
Yeah, it's weird. I don't get what that is.
That should be $9.50.
Reflecting some sort of split or something. I don't know. It's weird. Ford has those weird, like, far out options.
Yeah, I'm doing in January.
I don't like it. But I like, as income strategies, I like to just stick with quarterlies. And I'll do about 1, maybe 2 strike prices up from my cost basis. That way you get a little exposure to some growth, a little hold on the dividend. Because Ford pays quarterly, so if it's not going to get called away, you're also going to get a dividend on top of it.
Disgusting.
Disgusting, man. So, well, let's go ahead and roll into today's topic. Do you want to? Oh, did we do the names?
There's not much news. There's not much news. Read the op-ed. There's someone still leaking inside Trump's administration. Not much is going on. Technology's selling off. We're still doing stuff in the government with that. Market news 1.
Oh, real quick article by Jason Bessing. I'll put the link here in the show notes. Real quick, interesting. Coinbase considers launching crypto ETF with help of Wall Street and BlackRock. And with that comes a $6 trillion asset management company.
God, they're just fucking throwing shit at the SEC and seeing what
They're
sticks.
They're trying to do it. So Coinbase is looking to partner with BlackRock on an ETF.
You can invest in BlackRock, can't you?
Yeah, they have stock. I think it's BLK.
They have funds, right? Yeah, BLK.
Like, you can invest as the company, and then they also have mutual funds and retirement plans and shit like that.
That's an expensive stock.
You know, I was thinking about looking at a stock like that in a bull market when investments, like when everything keeps going up and up and higher volumes. BLK might be a great one to invest in.
All right, let's get into the topic of the day.
Management. Interesting thought. Let's jump into it. We're jumping into part 4 of our sector series already.
Is it part 4? It's part 3.
Is it?
Yeah. Because we did consumer,
you are right.
We did industrial, and now this is this.
So we did consumer discretionary sector. So the S&P 500 is broken into 11 sectors, arguably multiple subsectors, what have you, but we are defined as 11 sectors of the market. We have already talked about the consumer discretionary sector. We have also talked about the industrial sector. And today we are going to talk which sector, Nathan?
Real estate.
The real estate sector, arguably my favorite of the sectors, to be honest. To be quite frank, my favorite of the sectors, and we'll jump into that into a little bit.
Really?
But yeah. I like real estate overall. And the important thing about the real estate sector is that it is composed up of REITs, what we call REITs, or real estate investment trusts. And a stock that is a real estate investment trust is required to pay out 90% of all of its earnings in the form of a dividend to the shareholder. So because of this, real estate companies and REITs tend to pay out large dividends. And JC likey the dividends.
There's a lot of income portfolios, and I don't know this for sure, but this is what I would wrap my fucking aggressive income portfolio around. It would be a monthly paying dividend REIT.
Absolutely. And there's a lot of them out there. A lot of them. One of my favorites is O. Straight up just O.
Reality Income?
The Realty Income Corp. They call themselves
Reality.
The monthly dividend company.
They pay. I thought they paid quarterly.
No, they pay monthly. They call them, and they have paid a monthly dividend since 1956. And they also, I read somewhere that they adjust their portfolio based on the economic times because REITs are so diverse. There's so many different types of real estate. There's business real estate. There's skyscrapers, office buildings, storage units, retirement homes, hotels. There's cell phone tower REITs for the property cell phone towers sit on.
Yeah.
I want to start a graveyard REIT. But that's another conversation. Think about it. Get a huge plot of land, sell a bunch of graves, put all that money into some sort of fund or trust, and off the dividends you pay for the maintenance, and then you pocket the rest.
Now that you bring up reality income, realty income. That's how it's said, right?
Realty.
realty income. Ticker symbol. Oh, they look like a really good price to buy. Right? I remember when they were in the 70s.
She moved up. She got all the way down to the 40s, and then she popped up to like the mid 50s now.
58, almost 60.
Yeah.
I like this. I'd like to buy it.
Monthly dividend company, and they adjust their portfolio to different. So they adjust some. They have some apartment buildings. They have some commercial buildings, plazas, shopping strips, what have you. And they adjust according to economic times. They retreat back into housing in defensive times, or in economic times they go out into commercial development. And I think it's a strong play. Now, do they have a lot of growth potential? Not really. That's the downside of these REITs. But it's not all true. But for the most part, these real estate companies don't have much opportunity to grow, mostly because they pay out their money in dividends. It doesn't allow them to retain a lot of their profits. And the reason that they do this is to avoid corporate income tax. If they pay out to the shareholders, they pass the tax burden on to you because you pay that as your income tax. So that's one of the reasons that these real estate investment trusts typically go bankrupt or don't grow because
they have to pay that dividend.
They lack capital. So how do they get that capital, Nathan, if they do decide to expand and they need to do a buyout and they want to buy a shopping mall or a parking garage? What do they got to do?
What do you mean, what do they got to do?
They got to take on some debt, man.
Oh, yeah.
They got to take on some debt.
I don't know where they get the debt from. I guess they get it from banks.
Oh, there's banks and bonds and, oh, man, they do all kinds of preferred shares. And real estate is basically like, hey, pool your money in with us and we'll pay you a shitload of money.
The thing about, debt, though, is, when you're looking at debt, let's say, something like, I don't know what realty income's debt ratio is, which we can talk about that, too. This is a good time to talk about DE ratio. That should have been your market terminology. We'll do that next time.
Yeah. Well, I mean, we can brush over it because it is a big factor in the real estate sector.
Your debt to equity ratio, it's called a DE ratio, right? Is that how they say it?
Yeah. Yeah.
Your debt to equity ratio is your liabilities divided by your stockholders' equity. Liabilities is exactly what it is on a finance sheet. There's a section called liabilities. It's that number totaled up divided by the stockholders' equity, which is there's a definition for stockholders' equity. I don't want to give the wrong definition. But that number comes out to be a ratio. And a higher ratio comparative to the industry it's in has higher amounts of debt. For what is it? So for every dollar.
So yeah, if the ratio is 0.83.
Yeah.
That means every dollar of equity you have in the company, they owe 83 cents.
Exactly.
And, and you obviously want low debt to equity. But it's a little bit different for real estate because
Right. Okay.
a lot of people will lend money for land.
This is kind of where I was going with the. I'm sorry to take this.
No, you're good. You go. Go.
The
No, go
DE
for it.
when I look at REITs and I look at the DE ratio and something's like really high, like something I've seen like 5 before with the REIT, which is like really high. That means like the debt. I hope it's in assets. So I look like on at different other numbers or other key financial numbers like return on asset (ROA). If the return on assets are like really high, or return on investments, or return on even equities are really high in a REIT that has a lot of debt, then I like that. I know that their debt is at least working.
And it's at least at that point, it's usually pretty manageable because they do pay their debts before they pay shareholders. So for the most part, you want those debts to be manageable. And these real estate companies have hordes of cash flows that come in, hopefully, on paper. And that's what gives them the backing to get access to lots of cheap money. There's lots of venture capitalism that does real estate. There's lots of private real estate investment trusts. And it's very popular because real estate is a collateralized thing. It's a physical thing. You can go walk on the land. You can go inside the hotel. You can climb the cell phone tower. You can do whatever that this land owns, the apartment building, whatever. And that's one of the beauties of real estate. And that's why a lot of people flock to it. And in the end, a lot of real estate always appreciates, especially houses. Houses always appreciate. And so it's attractive for these companies to lend money.
What companies are in XLR right now?
XLRE.
Is that what it is? XLRE?
XLRE.
Sorry.
You're good. Well, I know right off the bat, one of the reasons I don't like the sector is they hold some shopping mall companies. And not really a big fan of that, especially Simon Property. But they hold American Tower, Crown Castle, Simon Property, Equinix, Public Storage, Digital Realty, CBRE, Boston Properties, a lot of real estate companies.
Services as well.
Yeah, Duke Realty. So Kimco, they have quite the market cap. I think they're pretty big.
Host Hotels, there's your boy.
Oh, I like me some Host Hotels. O is of course in there. So a lot of real estate companies. I mean, I'm not really big into the names of what they are, but
Vornado's in there.
There's a lot of diversity in this sector, and that's why I like it as an overall holding. Is there's diversity in the real estate, and the dividend is strong. Like you will always get your dividend in an XLRE holding. It might fluctuate, but
what's the dividend at 3.2%?
That's pretty strong for an ETF, man.
When does it pay?
I'm pretty sure it's quarterly. Most of the XLs, I think the XLs all pay on the same dividend dates.
Monthly?
Quarterly?
Yeah.
But what do you think of the holdings inside? To be honest, I don't know a lot about these companies.
So this is like a different ETF that like I really like in comparison to the last two. I like the tower companies in there. I like that a lot. Especially like because like everybody's having cell phones and they're always updating them. I feel like that's just a company that's always just going to be around. It's the tower companies. That being said, like, are these all these companies have to like go by the REIT rules, like paying that dividend?
Yep, absolutely.
Okay, so like that, like I feel like this, like you get like a lot of this right now, and just let this sit in your This is the average of real estate. So real estate as an idea is such a good idea. Now just get the average of it, and it's just gonna do well over time.
Yeah.
I feel like I would be more aggressive in this now at an early age. Especially, I would be more aggressive. At an older age for an income strategy as well.
Yeah.
I would pick individual stocks though, but I think this is a good idea now for a good compounding interest vehicle.
I like it as a core holding. It's something that you leave alone. You just add to it or leave alone. And it's going to fluctuate with the market. The market is going to move up and down and up and down and up and down, especially with real estate. Crumbling economy, real estate is going to go down. It might not get hit as hard as some other things like banks, but for instance, let's go to PSA. We have public storage. I like the idea of a storage company REIT because I see them popping up left and right. I know you haven't been to my neck of the woods in a few months, but they've put up like 3 new storage places within like a 10-mile radius of me. Like they're building them brand new, and clearly there must be some sort of demand for it, I guess. And I like the idea because most people want to keep their shit, so they put it away, they lock it away, and they can forget about it. Just here, take $100 out of my check, whatever. I don't care. But in the time, like deep recession time, and like if things get really bad, people can definitely cut that bill. Say, hey, we'll just put everything in the garage. I'm not paying $100 a month anymore. And so some of those might get hit hard. And I feel like if there's lower income housing that's heavy in a portfolio of a company, that can get hit hard too. Or single family homes or apartment complexes.
Yeah.
If we know rent's ridiculous. Rent is too damn high. Is it not though?
I think it's gonna go down soon.
Yeah, I think it's all gonna correct. But do you like it as like a heavy holding of a portfolio?
I like it at this price.
You like it at this price?
Yeah, I definitely like the $33 stock right now that pays that kind of dividend.
I've done it before, but I want to go on my real estate spiel again.
Oops.
So if you have $250,000 to invest, let's say you decide you could buy a home for that. You can get a decent place somewhere. I don't know, central United States, whatever. You can get a nice $250,000 house, 3-bedroom, 4-bedroom, 3-bath, something like that. I don't know. Just pretend with me, right?
A nice loft in New York.
Yeah, whatever. So for $250,000, you can just say, hey, I'm going to buy a house because I know houses appreciate, and I'm going to rent it out, and I'm going to have the renter pay the mortgage, and I'll pocket the difference. I can make a little profit off of it. It's a very good idea, and a lot of people do it, and it's somewhat easy to do. But at the end of the day, yes, your property will appreciate. Your house will depreciate. That renter, you are liable for damages. If things go wrong, if there's some sort of plumbing damage, you are on the hook for that. You have to pay the insurance on that house. There's a lot of side costs that come with it, in addition to actually having to go and maintain the house. Make sure they didn't break the garage door. We have horrible experience in our family with renting out our home.
Damn.
Apparently some kid was riding on the garage door, and like the other kid was like getting, yeah.
That's hilarious.
At the end of the day, who's on the hook for that? Because if something happens to the house because we never fixed the garage door, insurance ain't gonna cover it. So you gotta get it fixed. So yeah, so some shit like that can happen. Maybe if you have a washer and dryer in there, a lot of people aren't going to want to rent a house without it. So you're on the hook if it gets clogged with hair or something. I don't know. I'm just giving up pretty extreme examples. Someone flushed a diaper.
Okay, well in that case, you would diversify your portfolio of holdings.
Well, yeah, but what I'm saying is you could have that $250,000 in that house, and hopefully you get a great renter, and they take great care of the house, and everything is perfect, all said and done, fairy la la land. But just in case, don't you think it's better to diversify it across real estate companies whose job it is to maintain properties for you?
I know you want me to say yes, but partially no, because I would buy, I don't know, $250,000. I feel like yes, but if I had like $1 million, I definitely wouldn't spend it in the market. I would spend at least maybe half. Maybe do 2 of those houses that you're talking about.
I would prefer to do real estate holdings until I was buying large amounts of real estate. See, here's what I'm thinking. Now, what if you owned?
But most don't. I feel like you said, like a bunch of. Okay, if I was a tenant, let's say a landlord.
Mm-hmm.
Devil's advocate here. Hello.
Hi.
If I was a landlord and I'm just getting started, I need a small loan of $1 million. So I just feel like they get started with some capital.
So you're saying it's easy because you can get the mortgages.
If you go to like the bank and say, hey, like I'm starting up real estate, I need to do this. But if you said, hey, I'm gonna need $1 million for some stocks, they're gonna be like,
they won't do it.
I don't think we're gonna do that. They might.
That's true. That's true. But do you think that that's an altogether different strategy than?
Of course, yeah. I mean,
stock?
Like, in your scenario, if you had $250,000.
Mm-hmm.
In the house you described, you could get one of those with one unit, and then with that unit comes with a little kid that rides the garage door up and down.
Mm-hmm.
Then yes, I would definitely pick the stocks. In which case, I would not pick one house over stocks. I would pick the stocks of real estate.
But if you were able to get 4 houses,
yes, I would take the houses over the stocks.
Okay. See, my philosophy, I like the idea of buying multiple properties. Yeah. I like the idea of owning an entire like condo building or an entire complex, because then you have maintenance staff on hand to do that. You don't have to go shopping for a contractor like shit. They punched a hole in the drywall. Oh, someone shat down the garbage disposal.
That's disgusting.
You know?
I can imagine how bad that would be. Just shit flying everywhere.
Yep. You don't have to like go find some company who's like, no, you have people whose job it is that make $12 an hour and benefits, and they just ride around in golf carts and they fix your property. I like that idea, but at the end of the day, that's still the same. Like if you go that big, you might as well just hold it in major corporations. So I have trouble with the idea of multiple houses, especially multiple locations. Hey, did this guy pay his rent? Did this guy pay his rent? You gotta kind of manage it yourself. It takes time away. It takes effort. It takes physical work. 9-to-5ers.
Yeah.
But it's a safer bet. You can definitely you can get the mortgage and then take the equity while you still have the mortgage and do all kinds of crazy shit with it. You can aggressively expand with real estate if you do it right. I will absolutely give you that. If you know what you're doing, absolutely. Most people who jump into it, they don't know what they're doing.
I think let's wrap this up, dude.
I think let's wrap this up.
I mean,
do
you have anything else to say about real estate? I feel like that.
Real quick, I just want to go over one last thing I was thinking about. There's what's called the payout ratio, and that's basically how much of the earnings they're paying out. And you want to make sure that it doesn't go above 100. And if it does, you don't want it to stay above 100 for a long time, because that means that they're taking on debt to pay the dividends, and that's no bueno.
It's not good.
And they can do that. It's not illegal. They will fucking do it. But yeah, look for strong REITs with some growth potential, good dividend history, and I like just history in general. Like O has been around, I think, since like 1956. I like that track record, baby. So yeah, I like it. Overall, are you holding it? Are you long?
Yes.
Do you like it more than XLI or XLY?
This is my favorite of the 3.
This is my favorite because it's the more aggressive one.
Baby, the divvies. Give me the divvies.
It's an aggressive sector, that's for sure. And it's aggressive in its own way. A lot of people say, "Oh, isn't technology aggressive?" Yeah, technology aggressive, no shit. But this is aggressive on a whole different ball game. In my eyes, at least in my eyes, this is the way I view stocks. Everyone has a different reality. Realty trust. Do you have anything that you're watching this week, my man?
Why don't you go first, buddy?
Oh, dude, I'm all over CHK's little plummet here.
Are you saying CHK again?
Well, last time I didn't do CHK, I did Litecoin. Yeah, I like this 5.8% plummet. I'm digging it. I'm loading up.
All right. What do they actually own oil?
Yeah. Well, I mean, they act development of properties under production of oil and natural gas liquids, underground projects.
So you say that company moves with the price of oil?
They act pretty in tune over the course of like a year with it.
Okay. Well, that's great.
That's great. What are you working with?
I am watching Blue Apron, ticker symbol APRN.
Apron.
Blue Apron. Everybody knows what Blue Apron is, right?
Yeah.
The meal service, the meal kit services.
Yeah.
I feel like it was one of like the first ones that came out. Or one of the big.
It was like the OG, and then they got copied.
The first big one, I should say. So maybe Blue Apron wasn't original, but it was one of the first big ones. Let's see what they're fucking doing right now. What kind of market cap we're gonna? It's $1.80 stock right now, and I bought 100 shares of those motherfuckers and covered a call with them. Covered a call for the end of the month for $10.
I like it.
I like it too.
So, are you hoping they get called away? Or are you trying to?
I wouldn't mind just like having time decay, just fucking eat away that premium, just get the $10 and flush it at.
Buy it back and keep pushing. Yeah. I like it. Keep pushing down that cost basis. I'm about it, son.
But if it goes down, then I'll buy like another month premium. I'm gonna stick with this one because it's so cheap. This is gonna be my covered call, like full. It's gonna be my long covered call test run.
Yeah, it's a good way to introduce yourself.
So we'll see how.
That's kind of what I did with Rite Aid to kind of get the feel for it, and just take like $100 bet and
just ride it out.
So far, it just keeps working in my favor.
Just ride it out. Oh yeah, well that's it. This is back-to-back episodes. We did an episode yesterday, an episode today. We went over industrials. So far we've been over what?
Industrials and consumer discretionary.
And now real estate.
Now real estate, baby. Right. My favorite. Where can they add us real quick?
Oh, you can email us any questions, concerns, comments, corrections. Please email us corrections because sometimes I feel like we don't know what the fuck we're talking about. Well, especially me sometimes. Email us anything, memes, all the good stuff, gambling strategies at rebeltradinggroup@gmail.com. That's Rebel Trading Group with 2 G's @gmail.com. Hit us up on Facebook, facebook.com/Rebel Trading Group. Find us on YouTube. Look us up on YouTube at Rebel Trading Group. We're on SoundCloud. Our most recent 4 episodes are on SoundCloud at SoundCloud. Is it /Rebel Trading Group?
I think so.
All right.
You can just search for Rebel Trading Group. We're there, baby.
Search for all the platforms. And Stock Twits, we're on there too. On Twitch, we didn't go live today, but we'll go live probably. We'll do like once a week, maybe.
I like once a week.
Yeah, like every Wednesday around like 4-ish. So look for that.
Dope-ish. All right, man.
Thanks for joining us, guys.
I had a blast.
See you guys next time. Maybe tomorrow.
Hopefully.
All right. Well, until next time, guys.